Bitcoin has just made a brand new all-time high at 110,000 US dollars. In today's video, we are going to be discussing whether or not this rally to a new all-time high will sustain and how high Bitcoin could theoretically move. We'll also be discussing the short term, going over the potential for a rejection from these prior all-time high levels and what the short-term charts are suggesting. And finally, we'll be discussing the total cryptocurrency market as it has broken out of a major $3.3 trillion resistance and the altcoin market, discussing when altcoins are going to make their next move. Before we get into today's video, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP group. To do that, click the pinned comment of the free channel, contact our admin, check out our 50+ month trading track record, or watch a 10-minute video showing you inside the VIP channel itself. You'll get access to the main trading channel with over 700 members, where you'll get access to trading setups with exact entries, targets, stop losses, and trade justification, including access to the second channel, which is a VIP exclusive group chat containing 5 different groups: the general chat, the trading chat and education chat, the daily video chat, the news, help, and of course the community trade setup chat. Check it out, we'd love to see you in there. Let's dive into the video. So as we just mentioned, Bitcoin was able to break through the prior 2025 all-time high, creating a brand new high at just over $110,700. And this came as a consequence of two things. Number one, the price action being able to sustain above that 104,000 weekly range high. And number two, the total altcoin, or should I say the total cryptocurrency market, breaking out of that horizontal level, which we define to be the level of resistance when, if broken, will result in a new all-time high for Bitcoin. So we can see how the pieces of the puzzle are coming together to facilitate this massive rally toward the upside. The big question is, now that we are entering this price discovery region, what are the probabilities that we actually continue through this region and do not reject from these prior highs? Are we going to see continuations upwards? If so, what are those potential targets going to be? And how is the short-term chart developing? Are we going to see rejections here? If so, where could that take us? How is the momentum and strength developing moving into these prior highs? So a lot to discuss today. We'll jump right into it. Before we get stuck into it, let's start on the market data. 24-hour volume and 24-hour liquidations. Taking a look at volume, it is up 46% at 440 billion. Pretty expected, as of course Bitcoin has pushed into a brand new all-time high here. And of course 24-hour liquidations up 84% at 454 million. Of the 454 million, 191 million coming from longs and 262 million coming from shorts. So even though we have seen a pretty significant move upwards, the move has not been a clean one. As we can see, we've had a heap of chop and volatility over here toward the upside, resulting in large leverage flushes toward both the long and the short side of the market in this directional continuation to our new all-time high. So very tricky trading conditions here. The DXY has continued toward the downside, breaking back below that 100 change of character. We are now expecting continuations through these lows and eventually into this lower 93-94 range over the course of the next 6 to 12 months. So watching that very closely. The S&P 500 has failed to sustain above that change of character level, creating a potential local top over here on the short term. Of course, this is going to be a higher high for the S&P 500 in comparison to these prior local highs we have been establishing. So we are overall still in a uptrend over here. However, this may be the end of this rally toward the upside, something to keep an eye on. Of course, with that failure to sustain above the change of character level, we did see a bearish engulfing candle pushing the price back toward the downside. And of course, we do run the risk of correcting back to these levels of support at around 5,700. We can also see over here, we have had a print on our MCB over here suggesting weakening positive momentum, indicating this now is going to be our trigger point for continuations. So what we have done, we have established now a new level of horizontal resistance, which is marked out by the daily range high over here at just shy of 6,000, meaning if we want to see continuations into our all-time high levels, we now need to break back above this level. And until then, we are expecting corrections into prior levels of support, watching levels such as 5,800, this level of resistance, what was once resistance, is now current support. We are coming back to retest that, and if lost, potentially 5,700 to 5,680. Of course, only if we drop back below this 5,680 level do we run the risk of steeper corrections. Until then, the trend, although we have seen some weakness develop, is very much still in an upward trajectory. So this is just a warning sign of what may potentially come in the future. It is not an indication that we are in a downtrend, but it is the sign that a downtrend could begin from here if these supports are not respected as support. And of course, this may be a leading sign to what we could see happen on Bitcoin if we fail to sustain above, where it is over here, this local, or should I say this 2025 high. So we're watching for reactions at this level as well on Bitcoin. We'll come back and discuss that in today's video. So that is it for the broader market updates, guys. Like we mentioned, we are discussing the short term, we're discussing the macro, we're discussing weekly and monthly charts, high time frame targets, all-time high breakouts, and of course the total cryptocurrency and altcoin market. So before we get into all of that, if you are interested in supporting the content even further, go ahead and sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which you can build up to 45%. You'll go to support me making this content, and of course you'll support yourself trading on exchanges I trust and get those exclusive bonuses. We'll play a quick ad and we'll jump right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get stuck back into it. So taking a look at the total cryptocurrency market cap, first and foremost, we have seen a breakout of that horizontal consolidation. The consolidation range we saw develop from that 3.3 trillion all the way down to 3.19 trillion. The range we've been in for now the last around 10 days. We've finally seen the break toward the upside, signifying that the buyers were able to absorb the weakness we were seeing develop as a consequence of course, weakening positive momentum and of course our negative momentum shift, which resulted in a correction back down to 3.19. But we were able to see that momentum trickle back upwards, and of course buyers step back in control, pushing the price through these local highs, facilitating a continuation upward for the cryptocurrency market, mainly for Bitcoin, as of course Bitcoin dominance is still very high, facilitating mainly Bitcoin moving now into its new all-time high. So looking at the total cryptocurrency market cap, we are watching the same things. The overall trajectory of this trend is very much still bullish, and it will remain bullish while we sit above this overall diagonal uptrend. Just like we were in an overall macro downtrend represented by this diagonal downtrend, we were overall bearish, we are overall bullish while we remain above this diagonal uptrend. So provided this diagonal uptrend is able to sustain, the expectation is that we eventually move into our macro range high for the total cryptocurrency market cap, which will bring us into this 3.5 to $3.75 trillion level. Now, if we are able to see this move occur, we will not only see Bitcoin continue well into a new all-time high, but of course we will see the altcoin market continue upwards. So the overall trajectory and overall narrative and bias right now is that the cryptocurrency market as a whole is bullish and is in a bullish trend, and that has been pretty much consistent ever since we were able to establish a breakout of this downtrend and then eventually a break of this prior higher low. Since that point, we have been in a strong uptrend for both Bitcoin and relatively for the altcoin market. I say relatively because some altcoins are performing much better than others. Some are doing amazing, some are doing okay. So looking at the total cryptocurrency market cap, the expectation is that we expect continuations provided we sustain above our point of confluence. The point of confluence is simply going to be the horizontal level over here at 3.19 to 3.25 and the diagonal uptrend. If we sustain above here, no matter what happens, the expectation is going to be upwards, regardless if it's a straight continuation or a correction into and thus a continuation again. No matter how that plays out, the expectation is going to be upwards. We only run the risk of corrections here broadly for the cryptocurrency market, Bitcoin and altcoins, if we see this diagonal uptrend being lost, and most importantly, that $3.19 trillion level lost. Again, the reason we're watching 3.19 is because this is our most recent lower high. So just like we were watching 2.84 being our prior lower high, if we lose this most recent lower high, that would signify a structural shift in the trend. We would have a break of the trajectory and a structural shift in the trend, which is going to signify a macro reversal for the total cryptocurrency market cap. So those are the things we are watching out for the worst case scenario, for the warning signs. But until then, we are well above these levels. It is looking very healthy for macro continuation. So overall, looking good. Now, a lot of people are wondering, Whale, Bitcoin's gone to a new all-time high here. It's flown toward the upside, but the altcoin market's struggling. The altcoin market is not picking up its slack. Why is that the case? Well, it's very simple, guys. The altcoin market is not expected to see that aggressive move toward the upside again until it breaks through a major trigger point. Just as we saw the breakout of this prior higher low at 840 billion, which resulted in a significant rally into our next resistance for the altcoin market, which was around a 15 to 30% rally for the majority of altcoins. Again, some altcoins doing 100%, some altcoins only doing 5 to 10%, but the majority of altcoins did on average around 15 to 30% rallies. This was a breakout of a structural level of resistance, which facilitated a strong move into our next level of liquidity. For us to see another move upward for the altcoin market, an aggressive move upward for the altcoin market, we need to now see this $940 billion level break. This is going to be our next trigger point, or our next major level of resistance, which would facilitate a market-wide rally for the altcoin market, meaning 90% of these altcoins will do very, very well. 15, 30, 40% rallies. A few will overperform, of course, and a few will underperform, but the majority of altcoins should do well if we are able to break through 940. So we're not expecting altcoins to start popping off right now, but we could see that build up occur into what will be a larger move toward the upside if the total cryptocurrency market cap is able to sustain. And of course, if Bitcoin, most importantly, Bitcoin is able to sustain above these highs, which you can see in the short term, it is definitely struggling to do so at the moment. So something to pay very close attention to. So just as we have a bullish trigger for the cryptocurrency market, we have a bullish trigger for the altcoin market, we need to have a bearish trigger. So at what point do we expect corrections for altcoins? Put it simply, the baseline of the Ichimoku cloud, this orange line, if we drop below the orange line, we expect corrections on the higher time frame towards a 50, towards a 200 moving average. That would be a steeper correction. If we look at where that baseline is, it is actually mapping out the equal low or the most recent lower higher low over here for the altcoin market. So a loss of that level would of course be a structural shift indicating a correction toward the downside. So for now, altcoin market, the altcoin charts, some of them are going to do okay, some of them are going to do bad, some of them are going to be good, some of them will just consolidate sideways until we decide to break upwards over here or break downwards. So not too much of a rush here for the altcoin market. we might see a bit of a rally toward the upside, but again, 940 is really that level we need to break. If we break that, we're going to be more confident in altcoin positions for continuations upward. That is it, guys. Let's jump over to Bitcoin now. So a big day for Bitcoin. Let's take a look. It's taken quite some time. Since our last all-time high, it has been 122 days. So basically 1/3 of the year it's been. So 122 days since our prior all-time high. So it's taken some time, and during that last 120 days, we've seen some massive swings. First off, a massive swing downwards, followed by a massive swing toward the upside. We are now breaking back above that all-time high currently at $110,000 as we speak. So if we are taking a look at macro expectations, we do have to look at our weekly chart. Now, we've talked about this chart for quite some time now, and we're going to keep talking about it because it is so relevant in determining where this price is going to go and contextualizing where the price could reach targets, especially as we move into uncharted territory. Remember, we are now moving into, at least in the short term, whether or not we will sustain, we'll talk about in a second, but assuming we continue upwards here, we are moving into price discovery, meaning we have zero historical data on how the price has reacted at these particular horizontal price points. So the market is essentially finding its footing as it is developing over here, hence why we call it price discovery. So when we're looking at technical analysis, we use historical price as a large portion of our analysis to determine how the price will likely respond at these levels based on how it has reacted before at these similar levels. And that's how we develop liquidity levels. That is how we develop horizontal resistances and levels of support and trigger points and visible range volume gaps. We develop all this based on how the price has developed before. So when we enter price discovery, the amount of access to information we have is very limited. So we need to become a little bit more speculative, but it is more about changing the way you think to an invalidation approach, generally how you would do when you are trading uptrends. Invalidation approach simply is the concept that the trend is your friend until it ends, and until we get confirmation of reversals, expect continuations toward the upside regardless how the short-term chop is developing. So that is what we're watching now. Let's talk about that on a weekly chart really quickly. The weekly chart has shown us that, again, the breakout here on the weekly RSI has been something you absolutely need to pay attention to. Now, some people were obviously fading us at this point over here where we told you that weekly breakout, the RSI of the horizontal consolidation was a positive momentum shift which would result in a strong continuation. We saw it. The same thing happened over here. The weekly breakout, the RSI, a strong continuation upwards. A lot of people faded us. We saw it. The same thing over here. The weekly RSI breakout representing a strong positive momentum shift breaking out the downtrend resulting in a strong continuation upwards. A lot of people doubted that. The same thing happened again. Every single time here we have seen the same thing play out. We have seen the price rally upwards into these expansion phases, moving into long extended consolidations where momentum's decreasing but eventually gets absorbed. Momentum finally turns positive and the price is able to break through the long-standing consolidation, resulting in rallies to new highs. What we have seen here is textbook momentum absorption moving into reversals after strong consolidations. These strong consolidations, I like to think of them like pressure cookers. The longer that pressure is building up, the larger the reaction we end up having. So when we're looking at price targets, it's very hard to give specific targets, but what we can do is we can base our expectations based on how the price has responded to breakouts of these RSI levels in the past. Specifically watching 62.09. What we have seen historically is the breakout of 62.09 has resulted in the price clearing above its most recent high. So looking at the breaking point of 62.09 really quickly, we can see if we draw a vertical ray in over here, we can see the point of which we were able to close above that level, and then we can draw a horizontal ray in on that candle, and we can see the horizontal ray showing us that breaking through this region facilitated a continuation through the upper part of the resistance range of that consolidation, essentially facilitating a move into a new high. We have seen that play out once, we have seen that play out twice, we have now seen that play out 3 times in the last 2 years. Now, if we extrapolate this data going back as far as 2015, what we can see is if we measure the percentage change from the point at which 62.09 breaks upwards and the next local top is put in, what we notice is a minimum gain of around 10%. Now, this maximum gain can go up to 100%, go up to 70%, but what we have noticed is a minimum gain of 10%. So sometimes it is best to lower expectations and hit those targets rather than having these wild expectations and then being locked into your positions and being unable to make clear and objective decisions until the price target is reached. The worst thing you can do is to give yourself a static price target. The reason that is, if you're targeting 122,000, every single dollar below that level, whether it be $10 below, $50 below, it is not 122,000. So you are going to be biased towards holding to that level, even if the charts are not suggestive of it at the time. The best thing to do is to scale in and scale out of high time frame swings, taking profits when you're a profit, okay? And of course, entering as the market pulls back when it is the right time to do so. It's easier said than done, of course. I'm not trying to suggest it isn't easy to do. It is but that was correct. I'm not trying to suggest it isn't easy to do. It is very difficult to do, but you need to understand how the market's developing, and you need to use a lot of analysis based on historical data, and of course I like to use momentum when determining these levels of reversal, such as this one over here. So when we're taking a look at our targets, expected 10% minimum breakout from that 62.09 level, what target would that actually provide us going from that point over here? That would provide us a target of around 114,600 to 115,000. So right away, 114,600 to 115,000 is going to be the expected breakout target as a consequence of the 62.09 being broken. But we're looking at the context, the structural breakout of this high and continuation into what has been a new all-time high. The actual concept of which we have seen the 62 breakout has completed, and that is that when we break the 62.09, we see a breakout of the horizontal high of the prior consolidation, which then either results in continuations toward the upside, which we've seen historically play out, or may result in corrections. That is something we need to talk about. So let's go down to a short-term time frame now. This video is going for quite some time. It's going to be a longer one, but we have a lot to talk about. The short term is going to be very interesting here because we are seeing a few things happen. Number one, we have broken above this horizontal level. This horizontal level is our prior all-time high. We've mapped it in. Now, when we're looking at these levels, sometimes it is good to flip the chart and invert your perspective. I see a lot of people saying, oh, it's at all-time high, it's time to buy, it's time to ape in, it's time to jump in. And I guess I'm not here to try to tell you what to do. Of course, you would know where my entries were and why I thought the price is going to reverse around this point over here. But of course, if we're looking at the chart from an unbiased perspective, sometimes to check your bias is to simply flip the chart. And if you were originally going to ape into long positions here and expecting that move to occur, flip the chart and ask yourself, now looking at it from this perspective, would you expect the same move? And if your answer is different to the answer you had here, that means you have some sort of bias. It means you are not looking at the charts completely objectively, because if you were, your decision would not be changed simply based on how it looks, because you don't make decisions based on how things look. You make decisions based on how things are developing and developed. Okay, so a big mistake people who are new to trading is they look at the chart and they think they can look at it and they think based on how it looks is going to determine where they're going to go. In essence, there is some truth in that, but majority of the time as a new trader, you don't really know what you're looking for, and you don't know if you've even looked at it in the right way. So it's really bad to make decisions based on how it looks. You need to make decisions based on how the developing momentum is, or how the analytics are developing, whether it be momentum, like I use a variety of other different analytical tools, and then make your decisions based on that. So at the moment, guys, this is resistance. There is absolutely no doubt about that. This is a level of resistance. We have come up, we have liquidity grabbed above, we've created a new high, but we've also tapped into resistance. Resistance is resistance until it is not. Therefore, if we go down to a short-term chart, an hourly chart, we are watching, and the price action has been incredibly choppy here. The same goes in validation perspective. The trend is likely to continue until the overall structure of the trend invalidates. What we have seen, we have got these lows, okay? We have got higher lows. We have got higher lows developing. Until we break one of these higher lows, we expect the trend to continue upwards regardless of how it reacts on the short term here. Whether we see a rejection back down and continuation, we expect continuations upwards. It is only if we drop below these prior higher lows would we then expect a proper correction into our next levels of liquidity at around 102,000, which of course could push the price back into this weekly range. So it is looking very good, but it is important to contextualize how the price is developing and not get too far ahead of yourself. Let's jump over to an even smaller time frame now and discuss exactly what is happening here. So this is a smaller time frame. As we can see here, we have got our break of structure. This is going to be our most recent high. We had a bearish divergence over here, of course, result in a correction, back deviation to the 200 into this prior change of characters where we had absorption and continuations back towards our new all-time high. This horizontal ray is our prior 2025 all-time high. You can see we've had liquidity grabs above here. Mass liquidations often result in reversals. So straight away, we do have a short-term bias toward the downside. Like I said, short-term potential mean reversion back to the 50 EMA. If we're looking at momentum, we don't see anything too stand out here on momentum. We have a weak bearish divergence developing, but what we can see is we do have these red dot prints suggestive of a game in combination with this bearish divergence that the sellers are really stepping in here. If not, that the buyers are starting to lose steam, potentially a lot of profit taking going on at this region. So what I would like to see here, or what I would assume to see here, would be mean reversion back to the moving average, as 50 or 200 moving average, potentially find some degree of demand at these levels and then restart this trend toward the upside. If we just break immediately upwards, we run the risk of two things: an unsustainable trend or mass liquidations toward the upside, resulting in a very large rally, a very large short squeeze, which again will be unsustainable. So we need to watch how this price develops. If we want this price to develop smoothly and sustain above these levels, ideally we want to see some sort of pullback, some sort of mean reversion, and then allow that pressure to be absorbed and then continue upwards, instead of just a massive short squeeze toward the upside, which will hit our targets and we will definitely make profit, which is nice, but won't potentially be as sustainable in the higher time frame. So summarizing the video, but this is a very convoluted video, guys. A lot going on over here. It's very tricky when we start approaching all-time highs because we do enter price discovery. The short term does look topped out on the short term. We do expect mean reversion to occur. We can start to see some weakness develop on the short term. That is happening around a very key level of prior resistance, okay? Whether or not this will result in a large correction is a whole nother question that's going to be determined based on how this short-term mean reversion develops, okay? If we break through this region, we do want to see this level sustain, meaning we would like to see the price sustain and close a few candles above this prior high. And of course, if we're looking at the total market cap is indicating that we are in an overall uptrend that should be expected for continuations into these prior highs, provided the diagonal uptrend sustains. So straight away, we know we should be trading based on an invalidation approach. Looking at altcoins, altcoin market should only see a strong continuation above 940 billion. Until then, expect medium or mediocre performance, only provided the market is able to sustain. Thank you for tuning in, guys. Have a fantastic day. Catch you in the next one and look forward to seeing you all then. Bye.